Support for Short Stops is presented by the Caylum Trading Institute. Check out our website at www.cayluminstitute.com. Previously on episode 10 of Short Stops.
Now, at these stages, if you're talking about closing your eyes and buying at that point, you have to look and see whether or not 15, 16 times P is in play already. That's what, 7.2 to 7.4, somewhere there. So you're basically closing your eyes and buying at that point, right? But you have to understand that that's another
Malayo pa.
6 to 800 points down, right? That's another 10% in the market.
We are ANC, the ABS-CBN news channel.
For investors and funds taking a look at the Philippines. Now, after skyrocketing to an unprecedented high in January at 90.58, the PSE index has since fallen back to earth, and on June 20, it officially mingled with the bears, plunging over 20% from its peak.
Call it what you want, a game, an experiment, a gamble. But stock trading in the global financial markets to us is a business. Every day you're surrounded by the noise. Buy, sell, hold, buy more. And we're going to quiet it down and filter out the best trading strategies, tips, and stock picks. You want information on how to find your next bagger or home run? You'll find it right here on Short Stops.
Welcome everybody to Short Stops number 20, and we're back finally of a long break. Last time we came here, we talked about the market and we were sharing how we were worried and that the market could actually hit 7.2. We actually hit a low of 6.9, and the question is, what's next? So we brought in the guy who said 7.2, Mr. Lawrence Lee.
Hi guys, we're back.
And hopefully we can get better insight as to what we're going to be doing into the markets going forward. So the question is, have we seen the lows?
If you're talking about the lows, in actual lows, I think what's more significant is that if the worst is over. Those are two different things. What I'm talking about is whether or not the significant magnitude of liquidation wave is over.
So is it?
That one I think that's done. So if you look at it, we've dropped about as much as 23% from the peaks of 9,076. So all the way down to 6.9 and change, right? During that period, you have net foreign liquidation of about 1.23 billion. So this is similar along the lines of what happened the last time that markets fell in 2016. So that one was because of when Trump got elected, that everyone thought it was going to be inflationary policy. So the yield spiked during that time, and then you saw about 1.25, 1.26 billion worth of net foreign liquidation alongside it. That sell-off lasted about 5 to 6 months. Right now, we're sitting right at that 5 to 6 month level.
The challenge really is that the market, as it was being sold off the last few times, whether it was in 2013, 2015, or 2016, was most likely attributed to something that was irrational. While this case, that we're showing signs already that could have resulted into something more rational this time. So what do I mean is that now there's some more problems directly to the Philippines. Interest rates actually rose for the first time. Now we're starting to see spending, so current account deficit. Now oil picked up, inflation has also picked up, and poses a lot of challenge for the corporates. So if you look at some of the individual issues that have broken down, some of it looks more rational than irrational.
Absolutely. Most of the big boys, if you look at the sell-off, most of the big boys actually didn't fall that significantly. SM Prime, SM, AC, these guys didn't really drop that much. Whereas a lot of other individual issues really got destroyed. You're talking about your AGIs, mostly the gaming issues, Semirara, even Cebu Pacific really got hammered this round. There's a huge disconnect amongst basically the stable companies that you're looking at, who didn't fall because they are the ones that actually kept the market rational. A lot of these guys are super cheap at this stage, and those are the guys that today look like are the ones that you should be really zoning in on. Because when we talk about the market selling off 23%, normally everyone thinks that it's an irrational sell-off. But if you look at under the hood in terms of individual issues, guys like even Jollibee and Meralco, who didn't even fall this round, are the
Jollibee
ones.
fell.
Yeah, Jollibee fell last. The market didn't really bottom out until Jollibee started falling. But it's not like Jollibee fell down a lot. It fell down marginal compared to all the other guys that dropped some north of 50, 60%, right? So So if you're going to be focusing on individual issues that you should be looking to buy today, it's got to be the ones that are irrationally liquidated. So those guys are the ones that are super cheap at this stage.
Is that the reason why, parang if you look at some issues like MRP, how it bounced from 520 all the way to $7, like Shell bouncing all the way to 57, 58. Is that the reason why we can see a bounce on some of those irrational liquidations that happened?
Absolutely. If you're looking at sell-offs in general, rational sell-offs, people know what they're selling. People know what they're buying.
So may dahilan kung
may
bakit.
dahilan kung ba't binibentahan lahat yan. The ones that are irrationally liquidated is because people are just selling for no reason already. That's the reason why some companies can go as low as 1 times price to book or even lower than that, right? So like Cebu Pacific is like 0.7, 0.8 times price to book. AGI is the same. Mega Roll's 1 times price to book.
The difference is that someone's supporting the bigger ones, while these guys, wala nagsusuporta.
No, there's nobody. They just let it
Drop.
They just let it drop, and that's where opportunities actually emerge. If you're asking me what to buy today, you won't hear me say SM Prime or even or Meralco. You'll hear me say those guys that are now possibly 70, 80 cents to $1, right? I don't think that's anything that's actually 10, 20 cents to $1. I'm talking about maybe 70, 80 cents to $1 today. You've seen that the market went as low as about 2.5 billion pesos traded in a single day. That's 50% down from the average that we've been having, which is about 5 to 6 billion over the most of the second half of last year. That means that the activity has dropped down so much that at the current stages today, there's nobody wants to participate in the markets.
So even on this rally, wala rin volume.
Exactly. So that's actually the good and the bad, because the markets are rallying today because of the absence of selling. So the good is that now there's nobody that wants to sell. The markets it's easier to push individuals' issues up because there's nobody there that's going to be selling shares off. The bad of that is that it's also more volatile because the amount of people that are actually buying is also not that significant. So you're going to see a lot of choppiness, especially if somebody is content with what they made on the short-term rallies. So if you look at MRP or even Bloom, you see a 2-3 days of huge run-up, and then all of a sudden the next 2 or 3 days of sell-off has been so significant, well, much more significant because there's just nobody there that wants to come in and save the issue. So what you need to do moving forward is really, if they're giving you money in these short-term bursts, you have to know how to be taking the money off the table.
Okay. And what do you think about the market?
So what I see from the market is that prices have finally broken above the 50 EMA. That's a significant area that we were really looking at. One, that was the primary downtrend over the past 6 months. So since the very peak, you draw a downtrend line, that 50 EMA is the roadblock. So that's one. Two, it means that there's a possibility that people are actually making money over the past quarter now. So those who have been accumulating over the past 3 months are now actually ahead. And that's actually significant signs of underlying strength. The bigger problem is that the 200 EMA is still intact. That 200 EMA is sitting slightly under 7,850. As prices continue to move forward, I'm expecting that to move closer to about 7.8. That's where you're going to see people breaking even over the past year. And that's going to be the one that's going to be much more difficult to break. So more than likely, I'm seeing that we'll probably see a run-up all the way up to that 7.8, 7.850 level. And then we're probably going to be consolidating moving from there. That one's going to be the bigger roadblock moving forward. In 2016, during the Trump sell-off, the rally from 6.5 and change all the way to 7.3, 7.4 was like a week. And then from that 7.2, 7.3 level, it ranged for about 3 to 4 months. So what I'm really looking at is that we're probably going to see a much more sharper rise to about that 7.8, 7.850 level. It's going to be sharp, but it's going to be very volatile, but it's going to be relatively sharp. But moving forward, I'm expecting prices to be consolidating alongside that 200 right under that 200 EMA level. In an ideal situation, you actually want it to consolidate there, because the longer the consolidation at that point, the stronger the potential outside recovery that you're going to be seeing.
And normally in this long recovery of consolidation, what normally happens to individual issues during these times?
So you're going to see sharp run-ups in individual issues, which is the good part. So all those issues that are getting battered today, whether it's your casino issues or whether it's your financials that are slowly showing some signs of life, you're going to see some sharp rallies moving forward. And you want moving forward is that you want these guys to base out alongside the market. Some guys are stronger than others, obviously. So if you look at the financials in the banks in general, BPI, BDO are probably stronger than the other banks. Whereas guys like Security Bank and Metro Bank, which is probably the weakest of the bunch, the run-ups in what you'd expect is that the run-ups in Security Bank and Metro Bank are going to be sharper. So you see that sharp run-up all the way to potentially the 200 EMA, and then you'll see them park right underneath it. So maybe two to 3 months of basing out, and then breaking out from that point. Guys like BDO are going to be stronger because BDO broke above that 200 EMA. So it might actually park above the 200 EMA, which is the most ideal, right? In terms of valuation, BDO is going to be BDO and BPI are more expensive than Metro Bank and Security Bank. So you have to pick your poison, whether you want to buy the stronger one that is more expensive, or you want to buy the better, cheaper one that is a little bit weaker.
How important is fundamentals then in this type of scenario?
We always say that if the whole market is expensive, the value of fundamentals obviously drops significantly. So it's more about narrative and more about risk management when everything is expensive, because there's a potential downside at that point. When prices are cheaper, like they are today, fundamentals is absolutely the more important one. Not just valuation, but also narrative. You have to know what you're buying and how much you're buying it at. Even I was having conversations with a lot of my traders recently, is that they're joking around with me, how come I'm spending so much time looking at more fundamentals today than I am at technicals. If you're talking about technicals, trading technically today, everything's counter trend. So it's not the most ideal trend trading environment anyway. So either as a technical analyst, I would just do nothing, right? But opportunities to purchase are so vast today because everything's so cheap. So fundamentals plays a very important role today.
Do you have any advice to those trading all those penny stocks and basuras? Because when I look at it, I mean, there's still some form of activity, but the volumes are very dried up now.
Yeah. You have to remember something about penny stocks is that penny stocks is a byproduct of people who made a lot of money. So if you look at earlier this year, during the period of now, the reason why people were able to take on so much risk at that time was because a lot of those people made a lot of money.
It's the market that they made money in the market in general, because we hit a
Yeah.
high of 9,100.
Correct. Basura issues are really in favor when a lot of people are making a lot of money, period. Because everyone's in Superman mode, right? So Superman mode is when you've made so much money that you don't think you can do anything wrong, right? So when everyone's in Superman mode, everyone carries excess risk. You have people who don't know what's happening to the market, but they're just willing to bet on the market in general. The problem today is that everyone's risk off. So when everybody's risk off, that means that no one's going to put significant amounts of money to pump an individual basura stock. Because nobody has any buffer. Everyone's in the red there. So everyone doesn't have the guts to actually shell out more money at this stage. So if you're talking about whether basura should be in favor today and that's something you should be trading, I don't think that's the case. The other side of the coin there is that there are also alternatives for you to participate in. It means that there are a lot of stocks today that are really cheap. So you have options today. Unlike when the markets are expensive, if the markets are expensive, in terms of basura stocks, they become an option because wala rin naman ibang mabili, right? Today, there are a lot of stocks that are cheap, a lot of value that's in play today. And you have a choice to buy that, or you want to buy something that has no value. Right? So you buy something cheap with value, or you buy something that is worth nothing. Diba? So I'm in the camp that I'm always, first of all, I want to buy something that has value. Whether it's expensive, whether it's cheap, that's a different story altogether. But I prefer to buy something with value. But I would much rather buy something with value that's cheap in general.
Great.
Diba? So
Great.
that's something that there are many options today, and I think that's what you guys should be looking at.
Okay. To put everything in a nutshell, what kind of strategy would you advise traders, especially in this type of environment?
So you got to look long. You got to look big picture. Don't micromanage today. Don't try to think that you can buy high and sell higher today. What you're really looking at is that it's more of an accumulation period, and it's going to take time for prices to go up. There's still a lot of headwinds and a lot of negative overhang coming from whether it's the inflation or the twin deficits or whatnot, right? So Until those things are cleared up, you don't really think markets are going to go up anyway. I don't think markets are going to run away at this point anyway. But as prices continue to come down, these are opportunities are going to emerge, and I think that you guys have to keep your eyes open because things are cheap, and it's time to go shopping. But go shopping when it's on sale. Don't go shopping when everything's expensive.
Okay. All right, guys, we're going to leave you hanging. Next episode is all about all the sectors and our target prices in terms for the index. So we'll keep you guys posted. It's great to be back. Until next time, have a great day.
See ya.